Welcome to Market Nerd, where seasoned analysts break down listed companies on the Philippine Stock Exchange. Don't forget to like, subscribe, and hit the bell to get the latest developments and investment ideas in the financial markets. Let's dive in.
All right, so welcome to another deep dive. Today we are taking a look at the Top final prospectus. It looks like it's from March 2025. And yeah, we want to kind of dig into this company, see how they stack up against some of the bigger players in the Philippine energy sector.
Sounds good.
Okay.
One of the things that's really interesting about this prospectus is just how much it highlights the competitive nature of the industry.
Yeah, for sure. I mean, right off the bat in the risk factors section, it talks about just how competitive this market is.
Definitely. And, it's not just a matter of, a few companies vying for market share. I mean, You've got major players like Petron and Philippine Shell who are just absolutely dominating the landscape.
Right. And on page 107, it really lays out just how extensive their presence is in the market. I mean, they're involved in everything, like importing the fuel, the bulk, trading, the storage, the hauling, the retailing. I mean, you name it, they're doing it.
Well, yeah. And, when you look at a company like TOPLINE, which is what we'll call the company from the prospectus, this deep dive, they're coming into this market and they're trying to carve out their own space, which, good for them. But it's no small feat.
No, absolutely not. And their approach is interesting too, right? From what I'm seeing on page 109, it looks like they've decided to really hone in on the central Visayas region.
Yeah, they're identifying this region as kind of underserved by the existing players. Mm-hmm. So they're looking to establish a strong foothold there and then, potentially expand from there.
Yeah, and you can see that they're already making some pretty impressive strides. I mean, their revenue growth has been pretty remarkable.
Oh, absolutely. On page 109, it shows their revenue went from PHP 1.3 billion in 2021 to PHP 2.9 billion in 2023. That's a compound annual growth rate of 49.1%, which is pretty significant.
It is. And even in the first 9 months of 2024, it seems like they're continuing on that trajectory. And the bulk of their revenue is still coming from commercial fuel trading. It says like 97.9% of their revenue is from that.
Yeah, so they're really focused on that commercial side of the business at this point. But it looks like they're trying to kind of diversify a little bit too.
Right. They're talking about developing their own retail network as well.
Yeah, they call it light fuels, which kind of makes sense.
Mm-hmm.
They're lighter on the wallet, maybe.
Maybe so. But I think the real question here is, what does all this growth mean in terms of profitability?
Right.
Because revenue is one thing, but it's the profit that really matters at the end of the day.
Absolutely. And that's where things get interesting.
Yeah. Right.
Because on page 107, it mentions that the average gross profit margin for the industry in 2021 and 2022 was about 7.3%. It was actually trending downwards, so it's pretty tight margin.
Yeah, it is. And when we look at TOPLINE's own numbers on page 102 in the key financial and operating ratios section, we see that their gross profit margin was actually higher than the industry average in 2021. It was 12.3%, but then it kind of came down in 2022 and 2023 to 8.4%.
So they started out strong, but then maybe that competition started to catch up with them. Could be. But then again, for the 9 months ending September 30, 2024, it went back up to 8.9%. So maybe they're finding ways to kind of manage those costs better or increase their pricing power a bit.
Interesting. And then, of course, we got to look at the bottom line, too.
Right.
The net income margin. So on page 107, again, it says the industry average for net income margin was really thin in 2021 and 2022, only 0.33%.
Yeah, super tight margins there. And for TOPLINE, the prospectus doesn't give us a direct net income margin, but we do have the before-tax return on sales on page 1 or 2, which gives us an idea of their profitability before taxes.
Right. So for TOPLINE, that was 6.7% in 2021. Then it dropped to 3.8% in 2022, 3.6% in 2023. Then it was 2.2% for the 9 months of 2023, but then it went up to 5.0% for the 9 months ending September 30, 2024.
So it's been a bit of a roller coaster.
Yeah.
But it looks like it's trending upwards, which is a good sign.
Yeah.
And it's worth noting that even though their before-tax return on sales is higher than the industry average for net income margin, it's still important to remember that their actual net income margin after taxes will be lower.
Yeah, definitely. Taxes got to be factored in. So we've talked about revenue growth and profitability. What about their debt situation? What does their debt-to-equity ratio look like?
Well, on page 102, again, their debt-to-equity ratio has been kind of all over the place. It started at 3.6 in 2021, went up to 4.5 in 2022, then down to 1.8 in 2023, then back up to 4.4 for the 9 months ending September 30, 2023. and then down again to 2.2 by September 30, 2024.
Wow, that is a lot of movement. What do you make of that?
Well, it could indicate that they're actively managing their debt levels.
Right?
Maybe they're taking on more debt to fund growth initiatives and then paying it down as they generate more revenue.
Makes sense. And I guess it's worth comparing that to Petron and Shell, right? Since they're so asset intensive, their debt to equity ratios might be quite different.
Yeah, that's a good point. The prospectus describes them as asset intensive on page 107, so they're likely carrying more debt to finance all those assets, which means their debt to equity ratios could be significantly higher than top lines.
Okay, and then what about their short-term liquidity? How are they doing on that front?
Well, their current ratio is also on page 102, and it's been hovering around 1, which means they basically have just enough current assets to cover their current liabilities.
So they're not in a super strong position, but they're also not in immediate danger of running out of cash.
Yeah, that's about right. It's something to keep an eye on, but it's not necessarily a huge red flag at this point.
All right, and one last thing to look at, their EBITDA. So on page 102, again, it looks like their EBITDA has been growing pretty steadily. PHP $128 million in 2021, PHP $152.5 million in 2022, and then PHP $206.2 million in 2023. And for the 9 months ending in September, it was PHP $114.1 million in 2023, and then PHP $229 million in 2024. So a pretty big jump there.
Yeah, and EBIT is a good indicator of a company's operating performance. So that growth is a positive sign. It suggests that they're becoming more profitable from their core operations.
So we've covered a lot of ground here. We look at their revenue growth, their profitability, their debt levels, their short-term liquidity, and their EBITDA. Now, the big question you want to know is, how does Topline's valuation compare to Filipina Shell and Potron, and are they overvalued?
Yeah, that's the million-dollar question. But unfortunately, this prospectus doesn't give us any direct valuation data for Shell and Petron. So we can't really make a straight comparison based on numbers alone.
Right. So we got to kind of use what we know about Topline and the industry as a whole to try to figure this out. So what are some of the things we should be thinking about?
Well, first off, we got to consider their growth potential. Topline is a much younger company than Shell and Petron, and they're growing at a much faster rate. So that could potentially justify a higher valuation.
But as we discussed earlier, growth doesn't always equal profitability.
Right.
Right. So investors will be looking at whether Topline can sustain this growth and translate it into actual profits.
Exactly. And then there's the issue of their regional focus versus the national presence of Shell and Petron. Topline's focus on Central Visayas could be seen as both a strength and a weakness.
Right. On the one hand, it allows them to really dominate a specific market, but on the other hand, it limits their overall market share.
Yeah, and investors will have to decide how they want to weigh those factors when it comes to valuation.
And then we've got the whole retail expansion thing with light fuels. That's a big unknown right now. I mean, it could be a huge success, but it's also a risky move.
Definitely. Investors will be trying to assess the potential of that expansion and how it might impact the company's value down the line.
So it sounds like there's a lot to consider here. And without more information, it's pretty much impossible to say definitively whether Topline is overvalued.
I'd agree with that. We can't give you a simple yes or no answer based on this prospectus alone.
But hopefully this deep dive has given you a better understanding of Topline's financial performance and the factors that might influence their valuation.
Yeah, absolutely. And I think the key takeaway here is that valuation is a complex process. There's no one-size-fits-all answer. And it really depends on a variety of factors.
So for you listening out there, think about this. How do investors typically value a newer, regionally focused company with high growth potential compared to a more established national company? And what kind of information would you need to make a more informed assessment of Topline's valuation?
Those are great questions to consider. And I would encourage you to do your own research. Look at publicly available data for Shell and Petron and see how Topline stacks up.
And with that, I think we'll wrap up this deep dive. Thanks for joining us.
Thanks for having me.
Always a pleasure.
Yeah, you too.
All right, we'll catch you on the next one.
Liked what you heard? Drop a comment, like, and share this episode. Hit subscribe and tap the notification bell. We've got more insightful market ideas coming your way. Catch you on the next one.